What is going on, traders? Welcome back to the Traveling Trader. In this video, we will be discussing two stocks that have earnings today. That's BNGO and GME. Now, these two stocks are obviously on a lot of people's radars for different reasons. BNGO was a penny stock that shot into oblivion earlier this year, and GME, well, we all know about GME. So I'm going to give you my analysis on these two stocks, tell you what I'm looking for in terms of earnings announcements after market close today, which at the time of this recording is Tuesday, March 23rd, and tell you how I'm going to be trading these two stocks, or how I've already set up my trades for BNGO and GME. So you definitely want to stick around to the end of the video where I give you my trade ideas. And if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these two stocks you are trading earnings on. And if you want access to all of my plays, link is in the description below. Join over 5,000 traders in our lovely trading community. Without further ado, let's get right into it. Okay, let's start with BNGO, or Bionano Genomics. So Bionano Genomics, as most of you guys know by now, is a genomics company that has a proprietary system called Sapphire. Now, the Sapphire system allows researchers and clinicians to search for new diagnostics and therapeutic targets using something called cytogenetics. We don't really need to get into it. Now, what makes BNGO a compelling story is that Sapphire is a proprietary system, and one that could revolutionize the industry according to some experts. Sapphire is currently being piloted by different hospitals and labs, and many in this space, as well as crazy traders like us, are looking for conclusive study results. And that is really one of the main catalysts that we'll be looking at when they announce earnings. I know that earnings sounds like purely a financial event, but earnings also provides companies with an opportunity to showcase some of their developments with their products and service offerings. Now, Bionano hit a high of almost $16 back in February, and we are down 45% from highs, and it's been trading in this really tight range. Now, I'm not gonna lie, this right here is generally a bearish pattern. This is called a distribution pattern, but it is not one of the main strong patterns, which means that a downside breakout is not always the case here. Now, they are expecting an EPS of -5 cents a share, and they have a revenue estimate of $3.5 million, which is on the high side compared to what they've been doing over the last year. It'll be interesting to see if they can actually hit this revenue estimate. And again, I do want to hear updates on the Sapphire system. Okay, now the juicy part. So they report earnings after market close. What could potentially happen, and how would I be trading this going forward? So one thing I want to look at is the options data. Now, if we can detect unusual options activity, which is usually the case around earnings, we could potentially sense what the investor sentiment is for Bionano around earnings. So let's take a look at the options data. And by the way, I'm using Market Chameleon here for the options data. I'll leave a link in the description if you want to sign up for this service. I really love it. It gives the quickest, cleanest, best glimpse into overall options data for literally any company that trades options. Okay, so what do we see here? You see all of this volume and open interest on these calls, specifically around between, I would say between $10 and $12 on Bionano. This is where we see the most activity. Now, Market Chameleon tries to gauge whether these positions are short or long. And the way that they do that is by looking at implied volatility while open interest is increasing. So in their model, they say that if there is a decrease in implied volatility, it means that these are mainly short positions, meaning people are selling more calls than they are buying them. Now, from my experience, this is arbitrary. It has gone either way. I generally tend to look at just the number of calls versus the number of puts open. And if you look at the current distribution, it's 78% bullish versus 22% bearish. So it is kind of conflicting with the open interest data that we saw here, where it's trying to identify these as short buildups. Anyway, there are a ton of calls open between $10 and $12. Now, before we get into the trades, one other thing I wanted to look at was their cash burn issues, which they did have an issue with cash. And I'm looking to see from their earnings guidance if this issue is going to be resolved and how they plan on tackling it moving forward. Okay, so based on the fact that it's at a 45% discount, if we assume that there is good news surrounding Sapphire, surrounding their financial positions, and because of the fact that we see there are so many more call options than put options open, let's take a look at some low risk trades that we can make options wise. Obviously, from a trading perspective, I think a 45% discount on a stock that you are bullish on is an amazing opportunity to start a position and potentially dollar cost average from here. Now, here's another trade that you can do if you're bullish on Bionano long term. If you go out to August, you could sell the $8 puts for $2.60. Now what this means is that if Bionano actually gets to $8 and you get assigned, your actual cost basis will be $5.40 on Bionano. So instead of just going out and buying the stock, you can sell this put, and if you get assigned, then you'll be forced to buy 100 shares, but you'll be buying it at $5.40. If you don't get assigned, then you get to keep that entire $260 that you sold this put for. Okay, what's another play that you could do? Well, a defined risk strategy here. You can go out to, say, the $8 puts, and you could sell the 8-7 put spread on Bionano for $38. Your max loss here would be $1, which is the difference in the strikes, minus 38, which will come out to $62. So if Bionano finishes above $8 by April 16th, you keep $38. If it finishes below 7, you lose $62. Now you could take this one strike above, and you could sell the $9 put and buy the $8 put and collect $54 in premium, thereby reducing your max loss to actually $46. So in this case, if Bionano finishes above $9, you keep $54. If it finishes below 8, you keep $42. And this is currently just jumping up and down by a cent or two. So selling a put vertical spread here is a defined risk strategy that will allow you not to lose your shorts in case the stock does tank after earnings. Now, if you're asking me personally what I think will happen, I do think that the stock has a higher chance or higher probability of going up after earnings than declining. It is already down 45% from highs, and it is waiting for a catalyst. So I think any positive catalyst can send this stock bouncing and put it back on people's radars. If you remember in January, people couldn't shut the hell up about BNGO. We actually got in BNGO, I think it was around $2, might have been a little less. So those are the two things I would do on it, either selling a cash secured put going out to August, selling the $8 cash secured put, or selling the 9-8 put vertical spread, meaning you sell the $9 put, buy the $8 put, it's one order. You do that for 55 cents or $55 per contract, and your max loss is $45 per contract. And obviously the number of contracts that you do is up to you. All right, now let's talk about everybody's favorite stock, GME. GME needs no introduction. Obviously this is GameStop. Now, since the last earnings, GME actually gained almost 1,400% in stock price. We all know that that's mostly due to Wall Street Bets hype, obviously. But that story cannot be disconnected from our trading strategies with GME, especially going into earnings. Because here's my take on GME. This is actually a very interesting scenario. I don't think bad earnings will do much to damage the stock's price here, because the stock price is actually trading based on hype and really based on ideology at this point. However, oddly enough, it is also a reopening play because it is a retail store. And if we take a look at their earnings estimates, they're actually expecting positive earnings of $1.35 per share, which is insane compared to what they've been doing recently. You would have to go back to April 2019 to see a higher estimate, which was $1.58 per share. They're also expecting $2.2 billion in revenue. Now, we all know that gaming has seen an additional boom during the pandemic because everybody was home, so gaming was even more popular than it already is. It'll be interesting to see if they can actually hit these numbers, but this is what I was saying, is that I don't think missing these would do anything drastic to the stock price, and it will still trade in this wildly unrealistic volatile range regardless. However, positive earnings can send this thing to the moon. So if it actually meets or beats earnings, we could see GME going back to that 200 and above level easily. If you take a look at how it's responded to catalysts earlier this year, you know that it doesn't take much for GME to actually start moving. Now, one thing I'll really be looking at is whether they answer the question of why they haven't issued more shares yet, because the stock price obviously has ran to an unrealistic level, and a company should take advantage, a responsible company should take advantage of that and issue more shares in order to pay down their debts. All right, so how am I trading this going forward? Well, there are a few things you could do here. Because GME's volatility is so high, selling options is actually very lucrative. Let's take a look at the options data in the same way that we did for BNGO. And GME reports earnings after market close as well. Okay, so looking at GME's options, this is insane. Look at all of this open interest change. So many calls have been open for the March 26th expiration. We have 30,000 options here. Now, both on the put side and on the call side, Market Chameleon is reading this as a long buildup. So on the put side, it looks like people are selling puts in order to generate long positions, which is something that we did as well, and I'll go into my trades in a second. So for sure, based on this, it looks like that the market sentiment is bullish on GameStop's earnings. Look at the 250 calls. There are 2,300 new contracts today. That's insane. And by the way, again, if you want a link for Market Chameleon, link is in the description. So here's a trade that you can actually do on GameStop, which is a pretty low risk and easy trade. If you sold the 185 and bought the 180 put, that will give you $270 of credit, meaning that your max loss here is 230. Remember, the max that this spread can be is the difference between the strikes. So if you sold the 185, bought the 180, got 272 for it, then your max loss is $5 minus 272, which in this case would be 229 or 228, sorry. So all you would need is for GME to finish above 185. If it finishes below 180, then you lose $228. Again, you could sell as many of these contracts as your risk tolerance dictates. It is a risk defined trade. Now, could you just buy this stock here? Yes. I mean, it is sitting at the 21 EMA, but I would be very careful here, because buying it at 186, if it does tank, and it is after hours because they report earnings after hours, your stop limits are not in effect. So you will have to manually monitor this and sell it after hours if things go awry. But yes, you could certainly buy it here at the 21 EMA and look to take profits at above, 250 or so. This right here is actually a bullish pattern. It looks like a cup and handle. So this isn't a bearish pattern on GME. I actually don't mind starting a position here, as I said, but this is called a cup and handle, as you could see here. Sitting at the 21 EMA, the on-balance volume is actually still bullish. The MACD is turning a little bearish, but this can turn in an instant depending on what happens after hours when earnings are reported. Anyway, traders, there you have it. Again, playing earnings is always risky. Nobody knows what's going to happen. These to me are just fun trades that I do like to engage in. Size accordingly, obviously, do your own due diligence. Let me know in the comment section how you're trading these. Leave a big fat thumbs up if you get anything out of this. Sign up if you want access to our trading group. Stay safe out there, traders. Peace.